Maximus Analysis here for September 26, 2016, and we see that, again, we're pulling back, coming very, very close to the breakout level of 2134 for the weekly chart. Again, we'll continue to watch what they do and when they break the 2100 level, and what speed we will start to increase when we get below 2128. So we'll continue to watch it. Again, they were just funny style today, all stinking day. Going to the 15-minute, you could see that, let me put the volume here, that it's just been, they got to basically this level of 2139 and just chopped. Again, I have that as one of my levels. I do post them in the morning on Twitter. Follow me on Twitter. You will get the levels every morning around 8 o'clock. Newsletter went out today around 10:30. You should see a lot of different things that are starting to hit the headlines now, which are kind of doofy. But again, what we'll see now is all types of stupid excuses for what's going to happen. So now you got the presidential debate tonight. You got the Fed talking again, and I don't know why they have to talk so much, golly, but it's so annoying, so annoying. But either way, it is what it is, and they talk, we're just trying to follow the price action. So this is the 240 chart for crude, and we could see here that these highs are, they're right there. People that went looking at these levels to hold, it broke below them. And again, if it comes back and dead cat bounces to that, breaks below this low, it's looking to retest some areas that will make the bulls feel very uncomfortable. Friday and Monday action got all of the breakout traders from, this is the Fed talk day, and it came right back below. The low of this candle is 2131. So they break below 2131, 2130. Matter of fact, let me just double check. This is it, but this is probably the range that we want to look at to see if they break below there, because they'll go right back to this low. And then we'll see again so the selling might accelerate because people are going to cover. Covering means you're buying, you're selling, you bought and now you're selling, so it increases this on top of that, which could provide a lot more momentum. We'll see what happens overnight, because it's been that type of market over the last couple of days. You've had, again, going back to the 8th, they flooded it down, and now for 2 weeks they've just been chopping, chop, getting both sides of the fence. People are going short, long, short, especially short-term option plays, which I do not recommend. And short-term options, I mean under 45 days. I don't like to actually purchase anything under 60 days because, again, think about the option is that the risk is going to be the same regarding the dollar amount. The delta will be the same or thereabout. But the only thing that really worries, and a theta kicks in. Again, you wait till the last couple of weeks, it can really ramp all over the place. Just give yourself some more time so that when stuff like this happens, you're not seeing you're not being right on a position, but because you only bought a 30-day out, 3 weeks, they got you completely destroyed. With that being the case, we're looking at NQ for the daily, and again, we have this level that we posted out here, and these are the breakout levels, which would be going back to these highs. So again, make sure you're looking at not just a year of data, because again, a year of data, will put you right around here, but I find that most people just look at 6 months or 9 months tops, and you're not getting the big picture of why certain things are significant and why certain things aren't significant. So we'll continue to watch this one again on the daily time. On the weekly time frame. I did have these, and look on the newsletter. You'll see that I had this as some resistance points. Still holding, crazy. Still holding. To 1800 level, again, they're coming. They break below the 17,900. You see there's a lot of air underneath this, going back to the Brexit lows. This is Brexit lows, and again, I'm not going to tell you, I miss Brexit because it was 2 days. I thought it was going to continue to go down, rip back up, and I ain't trust this candle. I actually thought it was going to chop sideways similar to this. I am an honest person. So again, I'm watching this right here, but I have my buy levels that I did send out to all the subscribers as well. Crude, again, crude is one of those hard ones. Again, you're looking at the weekly chart for crude. How many weeks has it been sideways? It's almost feel like, gold. Again, we took this buy signal ran it all the way up, ran the stop back. If you're in the long, the buy stop back to 46.47, and it's been tapping 46.47. I'll actually show you what 46.47 actually looks like. And it's been a significant area. So again, it's been just rolling, tapping, last week rolling. So we'll see if they get back above it, and I'll wait for the later part of the week, because it's just been so sideways. And you also have that same type of deal, and which makes gold a little difficult to trade right now, because look, it's 12 weeks of just sideways move. I want to just punch down around that 87.5 level, but we continue to watch. We had some stuff sell off a little bit today. We had Google sell off. Again, I have the resistance level at 821. Price line not that bad. Netflix, again, we'll see if it breaks below this previous low, which is 93.25. So we'll watch there. But again, it's just so sideways. It almost feels like, again, you're trying to put patience. And again, trust me, it's probably one of the most frustrating things is people probably went long on Friday. Even if you went long on Friday with an option that expires this Friday, you're seeing it toast. It's burning up like crazy. So you just have to wait. It just seems like hurry up and wait, because then it just turn the volatility off, and then they turn it off. Turn it off, turn it off. It is annoying. It seems like just an options like money pit. Like they're like, listen, we're going to turn the markets off on Friday, or we're going to run it up to Thursday and just shut it down. So we'll have puts and call volume we'll get, and we'll just bathe in this money. And again, weekly options, just so you know, are created to make market makers money, not to make us retail traders money. They got tired of waiting 3 weeks, a month, every third week of the month, and so we're going to get this money every week. And trust me, it pays them very well, because you can trust me, if you've ever bought one, you know how quickly they roast. So we'll continue to watch what's going on here. Twitter kept up a little bit. Again, it's not that bad. Again, I want to wait for a pullback and have a significant or decent pull back into this $20 area versus taking the breakout. And we also said with Tesla, roll your stop up. And again, it's rolling the stop up to break even, hopefully, or just the low of this candle, just because of how the price action is moving. It was up today, which was surprising, but you're starting to get these wicks. These wicks are like, all right. So again, you don't take it off, but you just manage. And if you have some in the money, you could peel off some. Let's say you have 5 contracts, 10 contracts, peel off 7, keep 3, just to lock in some profit. You might not make as much on the upside, but you will manage your position to make sure it's not a losing position, because last thing you want is a losing position, a winning position turn to a losing position. All right, let's see what happens overnight. I don't sound enthusiastic, because I'm not, because it just feels like a bunch of rubbish that they're going on with. But again, just wait for these levels. This is last Wednesday, and that low is 21.26 for the day, and that's Wednesday when the Fed started talking again. Take care.